Everyone checking in on MJ. Had to wait for ACB earnings to come out and see what kind of reaction we would have there. Currently down about 1.5%. So that tells me that two things. Number one, the market did a pretty good job of pricing it in with a pullback today. And number two, the market still has no idea how to price Canadian MJ earnings. It is such a sector in its infancy. We are so forward-looking with our projections of market cap and what the future will hold. And so earnings these days, you can almost see it happen where in the first 10 minutes of the reaction, nobody knew which direction we should be going. So first things first, just to check in on the marijuana index here and how I use it to keep track of things, I want to know how does the US sector compare to the Canadian sector on any given day. So I sort them by percent change. And here looking at the Canadian names, I can see that 5 names in the sector were green and the vast majority were red. And then I can see that the names that were red were down a pretty good amount. We see a bunch of names 4 to 11% down. Then I compare it to the US. And in the US, we can see many more names in the green. And we look at the percent change for the red and pretty much 3 to 5% for all the red names that are down. So that tells me just at a glance, very rough, interpretation of that data is that the US had a slightly better day than the Canadian MJ names. And we're holding up better and had more green and less red, essentially. So again, that's something that I do pretty much on a daily basis because I want to know where money is going in the sector. Is it leaving? Is it shifting around? And that's a way to get a little bit of a glimpse into it. So now, let's get into our regular old technical analysis. So inside bars on the daily time frame on our major names had clear bear breaks. We had CGC today with a clear bear break of 45.23, increase in bear volume because we were trading sideways for multiple days. The bear break of 45.23 was the bear signal. We dropped over $3 from that point, a nice 6 to 7% drop, and we're now looking down at the next support levels of 42.08 and then down to 40.55. And I'm going to go through a little bit of my trade today and how I was playing this oversold bounce, and my oversold bounce play was marked by different percentages in terms of the position size that I was building. So I set a very clear criteria first thing. I am interested in an oversold bounce if we break 43 psychological support. And I was looking for 43 to break on the initial pullback. It didn't break, and we saw a bounce. So I said, all right, the trade didn't come to me. I'm not going to chase it here. That didn't meet my criteria, so I didn't take any kind of bounce trade. Also keeping in mind that I'm currently on vacation, and so I'm in and out throughout the day. Going to the beach in the middle of the day, that definitely has a factor on my trades right now. So I'm being more picky, and I'm waiting for the most ideal conditions. So here we are on this pullback, and it was just a slow and steady 5-minute candlestick after candlestick was red. The 5-minute RSI was down in the teens. The 15-minute RSI was extremely beat up. It was down in the teens, and the hourly RSI was down in the mid to low 20s. So those three things combined are why I was interested in this oversold bounce. And what I did was I first made an entry on a bear break of $43 right here. I entered on that bear break. So I got filled at 42.92, and then we saw a weak bounce attempt. But on that weak bounce attempt, what I did do was exit half of my position. And I cannot speak highly enough about scaling into and out of positions. It gives you so much control on managing your risk and ensuring that you can lock in some profit. So I entered the trade 42.92. I exit half of my position at 43.12, a 20-cent gain. So instantly my break-even price for that trade drops down to 43.72. So I said to myself, I'm going to put the stop loss for the second half of my position under the low of the day, which at that point was 42.82. So what that does is it ensures that absolute worst case scenario, I'm still going to profit on this trade. And if we do break that support level of 42.82, I'm going to get stopped out with the second half of my position. It was a small gain, but again, it prevents me from taking a loss. I'm back to all cash, and I know that the 5-minute, 15-minute, and hourly RSI are still at points where I'm still interested in this bounce. So that pretty much prevents me from entering the bounce too early. So I exit with the tiny win on that new low of the day bear break. And then I re-entered one position. And that's another point that I want to make. When I'm entering one position at 42.92, and I leave myself and I say, okay, I will enter another position if this drop keeps going. So my first entry was 42.92. I would have entered again at perhaps 42.52 to average that in but anticipating that, I will fully take on needing to take those two positions. I plan on taking those two positions when I'm entering the trade. And if the bounce gets going when I only have one position, that's great. I'm still profiting. So the next entry that I made was in the 4250s. Let's call it 4255, roughly is where I filled. And then I patiently waited and we kept dropping. And I said, oh man, we're getting pretty extended. And I said, all right, I will enter my second position of the two if 42 psychological breaks, just like that 43 psychological break led to a quick short-term bounce. I would be looking for the same thing that would drop my average down to about the 4220s. I'd still be very comfortable. We didn't break 42, so I kept my one position in the 4250s, and at that point, I had to head to the beach in the middle of the day, and I said, oh man, I feel like this oversold bounce is going to get going on the hourly time frame. I'm unable to watch it right now, so I'm going to exit break even on this bounce attempt. And I exited in the 4250s. Had I stayed and watched, I would have seen another 50 to 80 cents of upside. But essentially what that boiled down to is I ended up with a small win on the day on two trades. And I just wanted to highlight, it's nothing to write home about. This was not a successful day by any means. It was a day where I pretty much didn't do much. But I just wanted to point out that that's how I manage trades, by scaling in and out of positions to play with what's being given to me and react to what's being given to me. So on CGC, we have the daily, obviously the clear bear break today on the daily inside bar, and a weak bounce attempt at the end of the day gave us a tightening range. So look at the 15-minute time frame. We have the low of 42.08, the top of 43.29, a double bottom by 3 pennies, and then an inability to break resistance at the end of the day. In after hours, the CGC reaction to ACB earnings has us breaking this resistance, but we're going to have to wait to see how we set up tomorrow morning pre-market, because if we open the day below 43.29, that's still a very key resistance to be watching. And 42.08 and 42.11 is very key support. And right now, we are still holding up higher than where we closed after hours. Checking in on Cron. So Cron today also had a pullback, but the difference between Cron and the individual major names in the sector, as TradingView is struggling to load, is the low of consolidation. So all of the major names broke their low of daily consolidation at this point, and Cron did not. But it did close near the low of the day, just like yesterday, 1943. Lower low today at 1926. Support is next at 1872. So we have our high of the bull move, all-time high, 25.10. The low of the pullback was 1872. The high of the bounce was 1943. We could not see follow-through back towards resistance. Very brief bounce attempt before the bears took right back over. And here we are looking at 1872. After hours, we're a little bit lower than where we closed. So we're going to be looking down at key support in the morning. 1926 and 1872 are two key levels, with resistance of 2031 and 2044 as the most important two resistance levels to be watching. So tomorrow morning, if we can't break 2031 or 2044, we're looking down at 1872 key support, which the bulls really want to maintain. Otherwise, after 1872, next support level is 1838, and we will clearly be seeing weekly consolidation if that level does break. ACB, so earnings reaction after hours. The low of today was $7. We're currently trading at $7.07. So we're down about 1.5% from the close. We're up about 1% from the low of the day. But the daily inside bar told us everything we needed to know. Declining volume on consolidation, tight range. Bear break was 746, and we ended up dropping 6% plus. Inside bar was a very clear signal for bears on the daily time frame, and they followed through very well. So looking at extended hours, we did have some bounce attempt, didn't get a whole lot of follow through. And the question is going to be tomorrow morning, can the bulls hold $7? If we break $7, the next support is $6.89, $6.81, $6.76. So clearly the temporary tops are in. We've been consolidating for 5 days at this point, and the earnings for ACB are not doing anything to spark the bulls in the sector again. CGC earnings are Thursday. Again, same thing. I'm not going to expect a very significant move in either direction, because the market is still digesting how to price in these earnings. And it's pretty much, in my opinion, it's the market saying, okay, we know they're not great right now, but we're not pricing the stock with what the current earnings are showing us. We're looking to the future. APHA, actually, let's look at resistance. ACB, resistance will be 728, and then we'll look up at the high of the after-hours reaction of 754. APHA, so many times it stands out as the lead bear out of the major names, and we can't disregard that. So today, APHA is down 11%. Out of the major names, CGC is down 5.5%, ACB is down 5.5%. So APHA is down literally twice as much as all of these other names, and at this point from the high, we have pulled back a very significant 24%. So aside from Cron, we're pulling back, and I haven't done ACB here or CGC, but I'm just assuming by observation that APHA is down the second most in terms of percentage pullback from recent highs. So APHA closed at the low of the day, 831 is support, pretty much where we closed, where we're at now after hours. After 831 is 8 psychological, and the weekly chart with a very significant pullback at this point. Consolidation is underway. We knew consolidation was due for the sector, and we're now seeing it. And APHA is still likely to form a weekly high or low, absolutely, of 455, but the daily pullback is getting pretty significant. Time to start watching for an hourly oversold bounce on APHA. The hourly RSI is just below 30. If we were to drop down and break 8 psychological support tomorrow, I would be interested in an oversold hourly bounce. TLRY, daily inside bar, broke bearish. And actually, we saw a higher open to start the morning, but dropped down and broke our 2 support levels, closed at the low of the day. Support is 75.45, which broke at the end of the day. Next level, 72.52, and we are looking at a weekly chart that is just giving us another lower high. So we have the low of 64.06, the high of the bounce of 82.39, higher low of $70, lower high of 89.88, all about $70. If we break $70, the bears are back in full control of the daily and the weekly trend, and we'll see if that support's going to be tested this week. HEXO, key support test here, and it looks like we did just barely break it. 675 was that level, and we dropped down today to 671. So not a whole lot of follow through at this point, but we are potentially losing the daily uptrend. Must hold 651. That's the next support level to be watching. We zoom out to the weekly chart. We can see weekly consolidation is beginning to take place. We're looking for a weekly higher low to form, but there's no sign of that happening just yet. Hourly RSI is not close to oversold. I take that back. It is actually, we did reach oversold today with a straight pullback to the low. Is a potential hourly bear flag at this point, but if we do drop down and break the low of today, 671 tomorrow, that hourly RSI is very quickly going to be back towards oversold conditions. So 671 key support, followed by 651, and on the hourly time frame, anything under 716 is just an hourly lower high. Still very clearly in consolidation mode for HEXO. TRST, also testing a key support in the short term. Looks like we're close to breaking it. Support is 955. Low of today, 956. If we break 955, we'll have multiple inside bars breaking bearish, and technically they already broke in both directions, similar to TLRY. We had a higher open that didn't get any follow through. The bears took over and broke a couple support levels, but it's all about 955 followed by 926. And if we break 955, we zoom out to the weekly, and then weekly consolidation will clearly be underway after the bearish reversal doji from last week. So a couple key support tests for the tier 2 names. OGI is in that list, or in that group of tier 2 names, but it's already been pulling back very significantly. And we are looking for a higher low compared to 587, currently forming a daily inside bar with a pattern of lower highs every day for 5 days in a row. If we get a bear break of 665, we look to 657 and then 618. If we get a bull break of 688, that tells us that our daily higher low is established at 657, and then we're going to look for a bounce and a lower high to be set in the mid $7 range, and for a tightening daily pattern to form. So daily inside bar to watch for OGI tomorrow, as we've already been consolidating for 5 days. VFF is giving us our tightening 4-hour pattern that we were anticipating. Double top 946. Low of consolidation is 790. Got to get my magnet on. And now we're looking for a higher low compared to 790. If we break 790, it's a double top and then loss of support, telling us further daily consolidation is coming. If we hold that level, we have a nice equilibrium and tightening range. It's a bit of an ascending triangle at this point, and we'll see if the bulls can make their way back up towards that 946 resistance level and 948 where we double topped out. So most important support short term is 840 to try and keep the 4-hour uptrend intact. And we did see a little bit of shift in momentum at the end of the day, but we need a lot more follow through than this. We have to get back to the upper $8 range to stay in this tightening range on the 4-hour time frame. I think the 4-hour is the most clear for VFF. That's what I'd be watching tomorrow. MedMen. So MedMen gave us the red flag a week ago that it was clearly standing out more bearish than other names. We keep having drama. And honestly, I said in the chat room today where MedMen's about to get crowned the APHA of the U.S. sector because it has, the brand is there and the market cap is there to potentially be one of the major players in the U.S., but we've got so many instances of drama where the executives are paying themselves too much in terms of bonuses. We have now potential racism from the executives, and it's just a whole bunch of negative overhang. So a week ago, we started pulling back before anybody in the sector, and that was a red flag because we said if we're pulling back now, when the sector is yet to consolidate, what does that mean we're going to see when the sector does begin to consolidate now that we've already started pulling back? We broke our key support of $4. We broke down bearish. We're now looking at 346 as the next support level down here and currently trying to see a bounce from our low of today at 397. And it's a weak bounce at this point. The hourly time frame, just looking for a lower high to form. Anything under 407 is going to be a lower high. So the bears have complete control of MedMen. And looking at the weekly time frame, again, we could see this a while ago, that this weekly bounce was not anything like the vast majority of individual MJ names in terms of the 7 weeks of strength that most names are seeing. We saw a couple weeks of upside and then 2 weeks of consolidation and then a week follow-through attempt. And now we're giving it all back. And if we break 9 or make that 346, the all-time low is the only next level. So MedMen was one of the names in the U.S. intro video that we put out. We had 6 names that we were highlighting in the U.S., but MedMen, they also had a bunch of shares becoming unlocked after we made that video, and just not as interested in MedMen right now because of the drama, number one, and the price action is reflecting that. So I'm much more interested in, IAN and CWeb and CURA as these names in the U.S. sector. And until we can see MedMen clean their act up and get some good leadership, it's going to continue to hinder the stock price performance. ACRG. So ACRG, also a bit of a red flag. 2057 was the low of consolidation at this point, and the bulls were hoping that we were going to form a weekly higher low. We broke that support, didn't get a ton of follow through for the bears, and there was actually some solid bull volume buying at the end of the day on the 5-minute time frame. But if you look at the hourly, we're just looking for an hourly lower high compared to 2239. So the weekly time frame at this point, I would be cautious just because in such an infancy of trading, after it just recently began trading, we got the all-time high, all-time low, lower high, higher low, inability to see continuation and a rejection, and then a break of support. So what I would be cautious of is, if I'm a bull, is the potential that this is going to be a long, drawn-out weekly equilibrium until the middle of the year, another couple of months. And if we keep pulling back here into the upper teens, we'll have our high, low, lower high. We'll look for a higher low around the $18 range. Then we're going to look for a bounce and a lower high around the $22 range. And just to very roughly draw what this could potentially look like if we get further pullback, it would be this long, drawn-out equilibrium where we would look for a break, sometime in May or June. So that's obviously looking way in advance. We do need a bit more bearish pullback and follow-through from the daily support break we saw today. But if we get an hourly lower high and then lower low, that's exactly what's going to happen. And again, the weekly chart with an equilibrium tightening up for a couple months is probably the most likely scenario. And we'll wrap it up here with T-God. TGOD's a name that's been consolidating on the daily time frame a lot longer than most individual names. Lower highs and lower lows now for a couple weeks, and we're down at the low of this pullback at this point. The daily trend very clearly changed when we broke support of 342. That gave us our high, low of the pullback, lower high with the inability to see continuation, and then we rolled over and we're continuing the bearish momentum since then. Support is down at 277, and we are looking at the weekly chart very clearly seeing its consolidation underway. So there's no red flags here. We just need a weekly higher low compared to 219, and then the bulls have to turn it around and confirm the weekly trend change by breaking 432. And with how much we pulled back at this point, I don't believe that's going to happen anytime soon. Look at the weekly volume climax marking the temporary top, leading to consolidation, and we are, again, this is another scenario where we've already started pulling back on the weekly time frame, yet CGC and all these major names are not really pulling. Well, I take that back. CGC is clearly consolidating on the weekly time frame at this point. I was thinking of Cron, which is not really starting consolidation just yet with the clear pullback from the higher lows every single week. But clearly the sector is in consolidation mode, but there are names like TGOD, which has a bit of a head start and has pulled back more so. This is the third week of consolidation, where most names are on their second week of consolidation. So just something to be aware of and to watch how it interacts and reacts to what the rest of the sector is doing. But the bottom line as we head into tomorrow is ACB earnings are a bit of a non-event in terms of the market doing a good job of pricing in those earnings today with the drop of 5.5%, and we're pretty much, around where we closed at the end of the day with the reaction to those earnings. And the question is going to be, does the rest of the sector continue to pull back into tomorrow? The bears clearly have short-term momentum. I'm interested in the sector bullish only for hourly oversold bounces and bounces like we saw on CGC today. The more extreme we pull back, the faster we pull back, the more extreme the bounces are going to be, and the better the V-shaped recoveries. So CGC on the 5-minute time frame was not ideal today, because if we look at the 2-minute time frame, that pullback was just quick little lower highs and lower lows. I want to see these names fall off a cliff with a lack of any support nearby and just dump and then get to extreme RSI levels, because those are the times where you see 5% oversold bounces that can allow for a lot of gains for those bulls. Bears are very comfortable. A lot of people entered into puts or shorts over the last couple of days. Congrats to those bears anticipating profit taking heading into the earnings season. And from here, we're going to anticipate that consolidation is likely going to continue, and we'll look to see how the sector sets itself up for earnings of CGC on Thursday. We've got 3 trading days until that happens. Hope you had a good day, and we'll see you tomorrow when we check in.